welcome to the Insurance Story Podcast, the platform to spread knowledge on insurance innovation, digital disruptions, and entrepreneurship. Our website, insurancestory.com, and we are available on Spotify, Apple, Google, Audible, and Amazon Music. Today, we will discuss on the topic the evolution of insurance affinity, past, present, and future. And for that, I'm delighted to welcome our guest, Phil Hobson, who is the Managing Director for Affinity at Marsh. Hobson joined Marsh in 1996 and has served in a variety of leadership roles, most recently as commercial and consumer leader for Asia prior to his new and current role. He has more than 34 years of industry experience and has led teams across Asia Pacific. So, Phil, a warm welcome to the show.
Hey, thank you for having me, and excited to join the podcast. And let's share some thoughts. It'd be great.
Thanks so much, Phil, for your time. To quickly jump onto our agenda for the day, how has the concept of insurance affinity evolved over the years, and what are the key historical factors that have shaped this trajectory from past to what we see in the present? What's your views on this?
So that's a really interesting question and quite a lot to unpack. So maybe I just start a little bit on the history, right? I mean, affinity programs have been around for a very, very long time. And they've usually been used to support risk groups who have a common exposure and where they've been looking for cost-effective insurance. And probably some of the very early ones were programs like doctors' medical malpractice insurance, right? That would be a good example. And also in the auto industry, where affinity programs have been running for more than 70 years. So the concept of insurance for affinity groups is not new. I think, though, when you think about how that's shaping, there's a number of key factors that I think drive the success or otherwise of affinity programs. And the first thing that kind of defines that concept is accessibility and pricing, right? When you pull together a homogenous risk group, so that's a bunch of people who all have the same risk exposure, it enables a carrier to hopefully deliver a better price and better coverage. So that's kind of the first point, right? The second one, from a carrier's perspective or an insurer's perspective, is it should enable them to deliver better efficiency because they're not having to re-underwrite the same risk to the same extent, and they can pool the exposure and deliver a one-to-many outcome. And I think the third thing, which kind of defines that concept of affinity, is it's all about augmenting the offer. You know, it's about how do I use an insurance product to deliver a better outcome, either as a member benefit or as an adjacent service to a core product from a manufacturer, etc. And it's there to generate both member benefits and sometimes revenue generation. So, you know, it's not a new concept. It's evolving, and we'll talk more about that. But those are kind of like the underlying factors that really define what affinity is.
Just out of curiosity, from the definition part, can you touch upon how exactly or how better can we really differentiate the product of affinity and at the same time the new products which we call as embedded insurance?
Yeah, sure. So when I think about affinity, right, affinity is a distribution strategy. So it's product agnostic from an insurance point of view. That's probably the first thing. So when you think about what defines it, it's generally defined by the style of distribution, right? So you think about technology, you think about digital delivery, you think about products inside wallets, you think about them embedded into travel solutions, etc. But I have a couple of views that I think help shape that a little bit more. One is really aligning the affinity insurance solution to the buying habits of the target group. And what I mean by that is, you know, what's something that they need or a habit that they have that we can replicate into an insurance product. You know, I buy a mobile phone, I need protection for the screen to crack, would be a good example. The other one is the risk profile complexity. How do we make the product align to the risk profile of the group? So, you know, I buy a tractor, I might need warranty because I'm using the tractor, you know, for fairly harsh working conditions, and something might go wrong. So that's got an interesting complex risk to it, but how do I define a product that matches that? I think the other thing then is, you know, always thinking about how those risks are emerging, because sometimes with affinity products, we're putting programs in place for risks that are new, and we're looking at that right now with, you know, some of the the breakdown of cyber policies, for example, and delivering micro covers in that space. And then the last one, which defines Affinity, is often we're always looking at new channels of distribution, right? So e-commerce is a good one that comes to mind. I mean, that didn't exist as a distribution channel 10 years ago. Digital wallets, another one coming to mind. Connecting, through more online retailers than has ever been before. And I think the last point I would make is the concept of the ecosystem, right? I mean, the ecosystem as a term didn't really exist 10 years ago. And yet now when you talk to an OEM, an ecosystem is what drives their Affinity solution about driving loyalization with customers. And the focus as a result is on the lifetime journey of the customer.
Yeah. If I really have to, summarize in one line, and as I understand is, embedded insurance and Affinity are two related but at the same time distinct concepts in the insurance industry.
Agreed. Yeah, because an affinity program could be a voluntary program, could be a mandatory program. An embedded insurance solution is generally embedded into a non-insurance delivery, right? Like a product, for example.
Yeah. Right. And Affinity is more on, I think more on the marketing angle. It will get, more robust kind of.
It's about distribution. Exactly. Yeah.
Sure. Well, fantastic. Thanks, Will, for that input there. And my next question to you is: in the current landscape, how are insurance companies leveraging technology and data to build a stronger affinity with customers? And can you provide any example of any sort of innovative strategies that you've come across?
Sure. I think the key thing there is you got to step back and take a view that everybody wants to build tech, right? Everybody wants to connect with the customer. The question is who owns that, who owns that area? And sometimes it's the insurer, and sometimes it's the brand, and sometimes it's the distributor. The question comes down to what's the product, and where the insurers are really working hard is monoline or simplistic products that they want to market direct to a consumer through a sponsor or direct. And a good example would be travel, right? And if you look at travel insurance now, it's become very dynamic in its pricing. It's sitting in the purchase path of air tickets. It's attached to credit cards, etc. So the insurance companies are focusing on those types of delivery. Now, the key that makes that work is obviously data, right? And the biggest challenge is always you can gain lots of data, but how do you analyze it and deliver insights that shape your pricing? And I think that's where the insurers certainly are delivering in that space of using that to deliver dynamic pricing. And I go back to travel or parametrics as good examples.
Right.
But one challenge they're facing, and that is that the market and the customer is looking for choice at point of sale. So that creates an interesting, what I call market layer, where someone like a broker or an insurtech can provide a marketplace that enables multiple insurers. And I'm not talking about an aggregation model. I'm talking about tying insurers who may have an individual product offering that comes together as a bundle for a customer. But equally so, it could be an aggregation point where there's 5 or 6 insurers delivering their digital journey into a marketplace. And there's no better place to look at that than in India, where there's plenty of that in the UK. Data itself, it's the holy grail. But the challenge with data, it's highly regulated. And if you don't get your consent set up properly, and we do see a bit of this, it becomes very difficult to manage, right? And the other problem you get is you can have a wholly digital journey, but we see a lot of phygital journeys. And phygital journey is where there's some form of human intervention in the process. And unless that intervention is tied in to an end-to-end solution, it can erode the data quality that you get from the transaction. So working with insurers, that's really important to make sure that you are managing that data end-to-end and that you are dealing with the discrepancies that usually come from human engagement, right? Hate to say it, that people are the worst sort of culprits for running data. And what that's doing is, to give you a good example, data is helping us with pricing refinements around electric vehicle pricing, right? Because there's been challenges around that. But the better data quality that the insurers get, the more they're able to refine the price to better and more adequately reflect the risk. That's probably the most sort of valid example I can give you.
Yeah.
But when you think about data itself, what it ultimately will drive is more high performance. It will, if you use EVs again, and just thinking about the term high performance in a broader context, when EVs first came out, the insurers compared EVs to high performance cars because of their 0 to 100 times being very fast, right?
Yeah.
But now they're in the mainstream. We've got the data and the repairability information, and the supply chain is there. That's helped. All of those different data points have helped the insurers to bring the pricing back to something far more practical.
So, when we really look at the angle of consumers or the end users, pricing plays a major role. So when we talk about data and of course analytics or any of the emerging techs, right? In the concept of affinity, how do you think pricing can really come to an advantage use of data and analytics?
Well, it's difficult because when you think about pricing, right? Pricing's made up of a number of different aspects: claims experience, historical performance of the risk, and obviously the data and insights. The challenge in insurance is the data and insights are generally generated from historical data, right? So when you think about looking at forward pricing in the affinity world, where the insurers are not necessarily having a lot of reinsurance, they're generally it's frequency exposure. It's very hard to think about the impact that data has on pricing. But from a customer point of view, one of the other challenges we've got is one of the benefits we've got in the affinity world is we can skin the product down to meet the price point of the customer because the customer's needs are generally not that complex. Do you see what I mean? Like there's this relationship between data and price, but it goes further than that. But we have the ability to shrink coverage to meet the customer need. And for example, in warranty, for motor vehicle, rather than giving a full comprehensive warranty, you might just give a driveline and engine warranty. It's a good example.
Right. Yeah. I think that's quite interesting, and how we have really touched upon that. We really go beyond that, right? The need to go beyond on what's being tested as of now to
very much
meet
so.
the customer need, right?
Yeah.
And of course, consumers. I don't think so. This is a regional kind of a concern, but globally, I think the end user are the one who's more price sensitive, and the better we crack that part, the better we do business. And
that is the world over.
Yeah, absolutely. With that, Phil, my last question to you is, looking ahead, what trends and developments do you foresee in the future of insurance, and how might emerging technologies, societal shifts, or even regulatory changes impact the evolution of insurance affinity in years to come? And I really want to touch upon this question because affinity is a concept which is not really being widely known or practiced in the world of insurance globally. Perhaps in some regions of the world it's quite strong, but not most of the regions.
No, look, good question. So there's a couple of things that are concepts that are intriguing me and keeping me awake at night, and awake in a positive sense, right? There's this move to embedded affinity 2.0, which is the blend of affinity distribution with embedded product solution. But I have a view on that, and the first thing is you got to break down the definition of embedded insurance, and to me there's four types. One is the product that is embedded in the proposition that the manufacturer, retailer, financier is pushing out to the customer. So a good example there would be something like a credit card that includes trip delay, right? It's part of the proposition, it's embedded in the proposition. The second one is where it's embedded in the journey, right? So the customer journey, I bought my airline ticket, the next thing I'm offered in my purchase path is travel insurance, right? So it's embedded in the journey, but it's not embedded in the core proposition. You don't buy a flight including travel insurance. You make the choice to include it. The third one's loyalty. So in a lot of programs we're seeing our customers are looking to financial service and insurance products to be part of a loyalty proposition. How do I make the customer stay with me? I offer them something, right? Maybe a free 90-day cover or some other additional increase, sum insured or something like that, right? So that's the third one. And then the fourth one is adjacency. I have a core proposition as maybe a member of an association. As part of that, you might get insurance, but adjacent to that, I want to cross-sell and offer you something else that's seen as a specific benefit of being part of our association. So why I make that definition is when you think about looking ahead, the organizations that can truly grasp the four different types of embedded insurance as I've laid them out are going to be the organizations that are going to, deliver the best outcomes. because it's very easy to blend them, but each of our client needs are different. So that's one thing. I think the other thing that's going to hit us is consolidation, right? Cost of living is going up, discretionary spending is going down, claims inflation is going up, there's a move to a direct sales model in a lot of the industries. That's going to create consolidation. It's widely acknowledged that acquisition of customers in our market is very, very hard, right? And it costs a lot to bring them in. So when you think about that, aligned with those other sort of thoughts that I just laid out, right, it's going to require some consolidation because there's a capital base that's required to deliver Affinity products moving forward with those macro challenges at play. There's definitely going to be increased regulation, right? Regulation around AI, regulation around data, privacy, cross-jurisdictional selling, etc. It's coming, and there's this sort of need also to make sure we treat the customer fairly. So I can sort of foresee that there's going to be a challenge on some of the commission earnings. There's going to be a requirement to deliver services differently. There's going to be a requirement to make sure that the customer feels at the center of the offer in terms of the transparency of what they're getting. So I think that's another one. From a tech point of view, AI, right? I read a recent story which is quite interesting, and it went something like this. AI won't replace your job, but the people who understand AI will, right? And so what I mean by that is, insurance is still an advice-based industry, right? But if you can use AI to help you collate advice and deliver it in a far more accessible manner, then I think AI is going to make a big difference. But for us, where AI also is helping us is it's managing data. It's managing, the collation of data from different data points to deliver a 360-degree risk review of a client. That's very hard to do in a spreadsheet. But, with AI, I think that's going to make a major change. My favorite topic, ESG, climate change coming in, the increase of parametric triggers. I mean, the advantage of parametric is interesting, right? It ultimately delivers a very different claims experience for a customer, but there's sort of the unintended consequence. It delivers a better customer journey, and the experience around claims is vastly improved. So I see more parametrics coming in across the industry, so not just tied to weather. I think there's a lot more work being done now in the affinity industry, and this is why it's becoming important to understand the personas of the client. So the products can be tied far more effectively to the different buying needs of clients within a particular buying group. And I think all of that, with a combination of sort of a move to different distribution models like apps, car screens, using telematics, accessing digital wallets, etc., making the products more tailored, more price sensitive, and more applicable to the needs of customers. Not to say they're not applicable now, but they can always be refined. Those are the things that I see looking ahead that give me a lot of comfort that the affinity market is both buoyant and growing, and will become, and is certainly from I hear from the carriers, far more central in their strategic plans than it's ever been before. It's that ability to access mass market, right, and to distribute product efficiently. That's what gets people excited, and that's certainly for me why I love the affinity industry.
Yeah, I mean, to be very honest, this is something when we discuss, or rather, I personally discuss a lot of stuff on insurance and daily basis with various experts in the industry. But affinity is something which is the rarest of the topic that people really talk about, and it was very interesting to get so much of insights and data from your end, Phil, and I'm sure it's going to be much more helpful for our listeners too. And if I really have to sum this up in a nutshell, that the kind of changes we spoke about, from technology advancements to societal shifts to regulation and etc., I think insurers that really can adopt to some changes and of course continue to innovate in how they engage with the affinity groups are likely to build more stronger and lasting relationship with the end user. And as rightly mentioned, how customer acquisition is more or less a very kind of a difficult task for everybody, right? And it really depends.
Look, totally agree with that summary. It's there to augment a primary offer. It's there to make customers more sticky. And I think if I leave you with one comment, the ecosystem concept of utilizing insurance to drive loyalization to a non-insurance product, I mean, that's where we see we really add value.
Yeah, absolutely. Absolutely. With that, Phil, fantastic discussion. Thank you for sharing your thoughts today. I truly like to have you as our guest.
Hey, you're welcome, Surya. It's been wonderful. Appreciate your time. Take care.
And lastly, to wrap this up, you were listening to the Insurance Story podcast, and see you at our next episode. Till then, take care and stay safe. Goodbye.